Hello, everyone. Uh, Welcome to ICM Academic. Uh, Thank you for joining today. So today our topic would be like discover the essential steps to develop your trading plan. So before we start, like myself is Sai Mahesh, and I'm going to give you a few aids about a trading plan, how to develop your trading plan basically once you start the trading. So before we begin, so all the opinions, analysis, views, information mentioned in this webinar are only serve for educational purpose and should not be taken as a signal whether to buy or to sell a certain financial instrument. ICM does not provide any investment advice. So keeping on this note, let's have a small brief about ICM. Like ICM has been established in 2009 in London, UK, and ever since the ICM brand has grown into multi-regulation financial provider, which offers more than 5,000 plus investment instruments, the civil liability insurance on your trading accounts. We have award-winning trading platforms like MT4, MT5, C-Trader, and ICM Securities. Fast executions on funding, fast and efficient global account funding and withdrawals. And we also provide MAM, PAM accounts as well as affiliated programs, white labeling solutions also. And finally, we have ultra fast executions, competitive spreads in the markets, and aggregated liquidities. Well, great. So let's move on to the topic today. What we can say, what is a trading plan? So that's a major topic today. And before I begin, this webinar also will be uploaded on the YouTube. Later, you can have go and refer yourselves to get some more information about those who missed the webinar. They can also get a video posted on the YouTubes. So let's start with like what is trading plan. Before I start, I want to have one small kind of a question. Why am I trading? That's what more important thing to understand. Get into it. Yes, the simple answer is basically it's to make money. Everyone has to make money. That's the reason we start trading. How you make money? That is most important. Or you managing your risk should be a primary goal, because this will create an environment in which profits can be generated. That's the most important thing. So, okay, why does one need a trading plan? A trading plan which defines what is supposed to be done and why, when, and how, basically. So the trading plan will help you to limit your trading mistakes and minimize your losses. So the trading plan removes any bad decisions making in the heat of the moment. The markets can be volatile anytime. So if you have a proper trading plan, definitely will helps you, to take some solid decisions when the market against you or something. So with the right trading plan, every action is planned out, so that it is in a heat in a volatile moment, you don't have to make any rash decisions. So that's very important. Any traders has to be go through or want to adopt this trading plan is the most important thing. So, well, like a trading plan is a strategic process for investors to follow when identifying on the trading in a particular markets. A trading plan must include all aspects of your trading, a set of variables that includes a personality, expectations, and goals, risk management, trading systems, or strategy. So these are a basic thing which any trader has to be followed. Because I understand many traders who blankly, like don't, I mean, blindly they follow the other trades. Agree, because just because someone may be doing well with their method, it does not mean that it will work for you as well. So we need to understand you should have your own trading plan, own trading strategy, which gives a long-term protectivity on the trading. All right, so I kept you something information here. So what kind of evaluate your skills, what kind of skills you should have when you start your trading, basically. So this is applicable for the beginners as well as for the experienced traders. So to understand, to start with what skills they have when they start trading on it. So what do you know about the market? That is the most important thing to know. So which market you are going to trade, because there are many sectors of markets, like for example, currencies, commodities, or we can say stocks, indexes. So many markets are there. So you have to choose yourself which market suit you accordingly to understand yourself. So you have to know more about which market will be the best markets to start with your trading. All right. Next is this, which analysis methods are you going to follow? So again, is a major plays a major role here. What kind of analysis you're going to do with that market or with the particular instruments of the product? Talking about the currencies, or you're talking about commodities or stocks or indexes, whatever it may be. But you didn't know what kind of analysis you do, because different sectors of markets has a different factors which affect the markets. Either it can be a technically or it can be fundamentally. So based on that, so you have to make sure that what analysis method you're going to use to follow the markets. It's most important thing. And the other one is that is your knowledge enough to start. That's most, because when you have grab some knowledge, grab some information or analysis about how to start with this and which market you want to trade. So you need to know like the enough knowledge is there to start with this. For example, you take a currency markets. So which currencies are there? There are more than like 50, 60 pairs are there, more than that. So you have to choose which currencies suit for you. For example, like talking about major currencies. Okay, major currencies are more like to trade in euro and GBP, or maybe other major currencies. So it is most important thing like you to know which you have enough knowledge to start with it. Next is that, are you capable of keeping up with your plan? If you have a trading plan, and based on all these factors and all these points, you have to create a plan. So do you have any plan on the trading? What kind of plan you are kept on your mind, or you have designed yourself? Are you capable of keeping on their plan? That's also one of the major important point to be start with. And can you come in enough time for the trading? Which everyone has a big question mark here, because its market is 24 by 7, or sometimes 24 by 5, which round the clock, it walk around the clocks. So it start from the Wellington markets in the morning, and it's closed by the US markets. So market has a different factors which affect, like it can give you anytime the market is volatile, anytime the markets can be give the momentum. So, or you have enough time to trade. So these are major questions. So there's a few highlighted points. One, to evaluate yourself when you start trading on these markets. All right. So next, move on to the next. All right. How to develop your own trading system. So like before I start, like the main focus of this lesson, of this webinar, to guide you through the process of designing your own forex trading system. That's the main idea about that. So I like to start, before continuing this, we'll have a quick distinguish between trading plans and trading systems. So trading systems, it's like describes how you will enter and exit trades. And also like a trading system is a part of a trading plan, but with several important parts which also involved in it, like analysis, executions, risk management, etc. Many are there. So this is what exactly. So here we can see, so how to develop your own trading plan, which is a major key elements of developing a trading plan, is the most important thing. So the trading plan is a comprehensive decisions making tool for you, trading activities, which also will help you to decide what, when, how to trade. That's most important. The trading plan should be your own, a personal plan, and you should use. It's not using someone's what you can say, the blankly using others' decisions, others' plan, other strategies. Instead of that, you can keep yourself on your track, like understanding what exactly. So trading plan structure is very important, and which also attitude towards the risk, and what is available capital could be like different from others. That's what more important things. So your trading plan can be include like anything. It can be also find useful. That's most. So while having this trading plan, apart from this, that we have to research. As I said, the analysis is the more important thing. So when you start doing analysis, there are two type of factors of analysis. One is the fundamental factors, and one is the technical factors. So those who are more keen on doing technical indicators, using a technical indicators, they have to stick on that. So which product or which market is suit them, and which indicators are technically they suit them. Based on that, they can try to do the analysis. And there are traders which are in fundamentals. They trade on when the markets uh, impact or the market gives any news on the market. So it gives alert on that. The many volatility will be there. Based on that, they try to take a decisions. So make sure that researching, analyzing is the most important thing when coming to the trading plan. And keeping on this top, we have to create a strategy. So you have to make sure that which strategy you're going to follow. So, and there are many kind of strategy we can design yourself according to your time, according to your risk, according to the capital. It's all based on that. So while strategy also plays a major role when you're doing a trading plan, and risk management. Yes, that's most important thing, because risk management plays a major role on any trading plan strategies. So we already seen this risk management in previous webinars, how exactly what kind of risk managements are there, how to control your money, how to reduce it. Many things we have been gone through. Those are missed. You can have a look on the previous webinar where we discuss more about a deep discussion about the risk management. Well, so next is that once before having a trading plan, make sure that you have this four questions on your mind, right? Why, what, when, and how. Why means like obviously you have to know like why you are trading. What is the motive of the trading? What is the goal? So that is the one question to be there. And what and which product you're going to trade, which instruments you're going to trade, and which market you're going to trade, and when going to trade, and how you're going to execute the things. So this four important question will be there in your mind always when you start beginning your trade, as well as you have to find a solution for each and every question, and you can start it. So I explained here next slides, which are going to be give you the a few highlights, like what kind of checklist to be made once you start trading. So your goal. So I can say what is the motivation of the trading? So your motivation of trading and the time you're willing to commit is an important step in creating your trading plan. Yeah. So you can ask yourself, why not you want to become a trader? And then you can also write down yourself to achieve some tradings. That's most important things. You have to know yourself, okay, what goal I have with me, what is time. Because this also like it's a trading goals. Any trading goal, it's just like it's just be a simple statement, and it should be specifically and measurable and relevant. It should be that way. So you should also decide what type of traders you are basically, or you are a day trader, or you are a scalper, or you are a position trader, or that way you are trying to understand yourself what kind of trader you are. So your trading style should be also based on your personality or your attitude of risk, or as well we can say the amount of time you're willing to commit to the trading. So we can design yourself. So you choose yourself on the trading style. So your goal should be also based on your time. So whether much time is there to commit on the trading, or it also important to spend enough time preparing yourself for trading, in which includes like educating yourself, practicing your strategies, and analyzing the markets. This is all the main thing. So there's a main priority of a goal. That's basic. Research tools, where you have to keen on looking onto the what analysis you do on this, and majorly like what kind of type of traders you are, like you're a fundamental trader or a technical trader or something like that. So the amount of money to trade, the capital, the amount of risk willing to take based on the risk management, and timing and type of orders. So when you're coming to the amount of money to trade and the amount of risk willing to trade, that plays a major role, because your attitude to risk, that's most, because before you start trading, work out some such how much risk you are prepared to take on. Maybe both for individual traders or your trading strategy as well. Desire to take a risk is very important. The market price always change, and even like safety financial instruments, also very important to degree of your risk. But it depends on. So remember, you can manage your risk with proper stops, and that is all the possibilities are there. So obviously, risk is like management is one of the major roles here. So always plan your risk with a proper capitals, because you're capable of taking capital of trading is like this is how much capital you are have for a trading. So look at how much money you are afford to dedicated to the trading. So you should never risk more than you can afford to lose. So trading involves plenty of risk, obviously, and you could end up with losing all your trading capital more than that. But a beginner out has to be go through with a small trial practice and everything. And the experienced traders, the professional traders will have try to take higher risk on this. But it depends on the trader to trader's mind. So here is that way. So goals, research tools, amount of money to trade, risk, how much you're going to take, timing, that's most important thing. You have to have enough time to trade on the markets. Usually, scalpers and the day traders, they try to execute the trades within few minutes and few hours. But the Persian traders, they want looking for long-term and high risk and high profits. They look into the a weekly basis, daily basis, or weekly basis, something like that. And type of orders, what kind of orders you execute. Because in our platform, like MT4, MT5, and C traders, a different type of execution, type of orders are available. Like clients take right, we could execute with buy orders, sell limit, buy limits. So you can choose yourself which way, and also you can choose like depending on the risk factor, you can place your pending orders with a stop loss or a profit or take profit or something like that. Buy stop is a sell stop is a. So you can categorize the type of orders which you are likely to get. So this is a small about brushing up yourself for your trading plan. So quite they are very important thing like how to avoid a trader's stock mistakes. So every trader has to go through this thing, because obviously when you start trading, so we do mistakes. When you see like try to understand the markets, it being practiced, even still they have a very good strategy. Due to some other reasons, would have missed or done some mistakes on the trading. So we're going to give you a few how to avoid mistakes, which will be quite interesting. Maybe it can give you a lot of inputs for you to recover from yourself or to repair yourself from the trading. So having a trading plan. So make a plan, follow your plan. Trading without having a plan, it's obviously a mistake. It cannot be as you randomly buy or sell anything in the markets. It's differently. Maybe you try to get some profits in the market's movements. When the market fall, you try to buy it. When the markets rise, you try to sell it. Right? It's there is a market has a buying pressure and selling pressure, overbought and oversold. But trying to do that couple of times it gets success, but next time it lead you to a big loss or big against your positions. So obviously should have a trading plan. This trading plan which we discussed in the last slide, which should be on your own executions, should have your own timing of a trade, with also involve the risk management as well as with your proper capital to be allotted in this, which plays and leverage as well. So placing stop loss order, that's most important thing. At the time of initiating positions, you must know your exit point to limit your losses. I've seen many traders like they are randomly execute the orders fast and they keep waiting for the profits, or they didn't ever place any stop loss. Because stop loss, it's very important. You should never ever enter the market if you are not sure about your stop loss level is to be accepted loss. That's most, because taking a profit of $100 or $200 and leaving a stop loss for unlimited, so without having any stop loss limits, so it's again is a very dangerous kind of trades. So there will be a ratio of taking a stop or taking a risk on your trades. So one has to adopt with a stop loss, which definitely helps you to come out with the minimize your loss and ask and play give a space to think about the next trade. And if you hold on one position without any stop loss, what happens here? You keep holding the positions, and what happens? You try to again average your lot size at the bottom against your market positions. So again, it's again taking a multiple risk on your position. On again, you pumping more money to average your positions. So this get you complications. So make sure that when you have a proper trading plan, adopt to the trading plan, and place a proper stop loss, which will definitely help you to come out with a minimum loss, as well as give you some more idea about like how exactly market is against your plan or something like that. So protect your profits. Obviously, this is also most important thing. Like when you make, say, like 100 points profit, you should then concern to protect your profits. So this kind of profits, booking your profits is always good. Last webinar, we are discussed about scaling and scale out, which also helps you to partially book your profits. Once you partially book your profits, you keep your stop to the neutral break-even level, which also protects your positions. Instead of that, you're waiting for more profits. Obviously, you can wait, but you can have adopt some other stop loss or trading stop loss to protect yourself from the profits. So from the major losses. So this also helps you, which to avoid mistakes on while trading. Don't average. I was discussing about this thing. So don't use averaging as an excuse to accept the fact that your existing position is in loss and should be cut. There are seen many traders, they try to average the position, keep averaging every level of time. And the reason is that when you do averaging, so you mean that you're taking a high financial capacity of trading. So that means you're funding into the markets in a high level of funding. So like what happens here, when the market has a small move against you, definitely it's going to give you a major loss on your trading plan, as well like you can see the markets also, if you again on your winning side, there's a different cases, because markets keeps on a positive side. This is exactly we discussed again with the scaling and scale out method, which also gives you like a lot of comfortable zone while trading, instead of taking an average on a regular intervals on the loss side. Learn from your mistakes. So good traders recognize and accept the mistakes and cut the positions. Nothing wrong. So everyone do the mistakes. Even a professional trader has the losses. Without losses, it's not an easy job or an easy work to trade in the markets. And they never average. Inexperienced trader run the losses, hoping for the reversals. It's sometimes it happens like, but many times you're losing side. So obviously nothing long, nothing thing to cut your losses. It always helps you to protect yourself. Keep emotion check. When you make a bad trade, assess it again, develop your new plan, wait for the good levels to again. Don't rush into the market into new positions. Again, this is many traders will experience this thing, because emotionally or psychologically the market is involved, because when you see a couple of losses on the same hour or within a day, so obviously traders like to execute rush into the market to capture some trades. But we need to know, check yourself. So we're going to cover this topic as well as the psychological of trading. That will test yourself and know yourself, what kind of traders you are. It comes you with myth, but still it is like kind of a greed or a fear, to understand. So you should be more on check yourself on emotionally on a trading. So the next is like manage your risk. Always be prepared to take action in case of market goes against you, irrespective of what others would say. So basically, risk management is also one of the major important thing, and you have to check to avoid mistakes on the trading. Explore the ranging markets. Since around like 70% of the time the market is on range, so it's find out which day high and low, which is in the top or bottom of the day, you know. So there we can try to keep your stops. We normally says technically the resistance supports levels. There will be like a couple of resistance or more than three resistance levels or support levels. So where you can try to keep your a stop or targets to book your trades, which also helps you, because most of the time only the news times markets will be very volatile, trade on one side directions or either side directions. But apart from that, a ranging market is one of the best time to trade, because market doesn't have much volatile, but still there is some kind of momentum will be there in the market. So you try to catch some small profits, and mostly like a day traders always try to use this opportunity while playing for range markets. And next, how to manage, because this all in a trading plan should be have a journal check. because that's also a kind of a trading diary. Because one should know now you have a trading plan, you have a trading strategy, you are did everything, but you are start trading on a daily basis or a weekly basis, whatever it may be. But you should know like how exactly your trading performance works. So for that, a journals is very important. Some traders, I don't like to see the journal. They have a bad experience. But obviously, think about like how to know when you have a proper trading plan. Definitely, you have to look into your journals effectively, because a trading diary it's one of must to have. You know, any trader to must have how exactly your performance happened daily basis, like how exactly it has been given you include like it also include your entry and exit levels, profit loss, the volume, trade cost, what is the trade cost for you, and also check your trading strategy in a proper way. You can perform yourself like what to understand how exactly trading strategy has been performed. And also like you can also change your stating strategy when you need it. Like for example, your plan is not went well and it is you're not satisfied on your trading plan, and definitely it helps you to change your review or amend your trading plan in a proper way, so that you can correct your mistakes from there. So it's a discipline. Any discipline traders is a profitable trader, and keeping a trading journal is the first step to build your discipline. So obviously, discipline plays a major role. Because how the discipline comes when you have a trading plan, definitely there will be a discipline comes. So your trading journal is a log of all activities, of course, because you can find out entire trading activity, because we never know very important that is sold. Go to the trading log or journal, definitely gives all the inputs, and also you could plan. You can take a statistics on this, to understand what are the buy side, what are the sell side, and what exactly then the buy side happened, which are losses may accumulated on this. So this is how exactly. So here it gives the trading performance statistics, and gives a position sizing in case you want to reduce your size of your lots, or you want to increase the lies. So which also helps you by trading journal, which gives you some knowledge about that. So, and we can say that risk management, and did you want to reduce your risk or increase your risk, or I want to reduce my capital of risk on that, for example, 10% or 2%, which also gives you some outlook about trading when you're checking with your journal. And we can say that review and improve your trading performance and plans. That's the most important thing. So overall, like this is what exactly about. So once a trader has a plan, and definitely it has to be go with all this kind of procedure. I mean, the process of step into it, and definitely that gives you the major result on the trading. So this is all about like. We discussed about today. So we are go the next coming webinars. We plan to move on many discussion of one each topic about the technicals, indicators, fundamental indicators, as well as go deep into the what can say about more on deep in the advanced kind of educations. So definitely it's going to be it. So this is all about. If you have anyone has any doubts or any clarifications or anything, you can write your questions on the bottom. I can help you out. Yeah, there's the one gentleman asked for one question: is how to control the risk uh, on positioning. Okay. Yes. See, basically, positioning size of your size positioning is very important on any trade. It's all based on your capital. It's also based on your which product you are into, and also like based on the stop loss which you're going to take. For example, which completely on a ratio based, like risk and reward based ratios. So when you have a proper reward and risk ratios like 1:2, 1:3, or 1:5, using that as a method, and you can keep your stop loss as a target according to that. This will help you. Like so, this is a very important point which to be taken care while going for the trading. Thank you. You can write your questions at the bottom so I can be able to answer for you. There is another gentleman asking for a question like which time is the best time for the trading? Well, see, as I said, the market is around the clock. Uh, like whenever the market has any news time or any kind of indicators news are there, calendar news are there, definitely there'll be much volatile, obviously. So the capable of taking that particular time, it's obviously a risk taker trying to take it. But when you have other side of time, like market will be in a range, as I said, like most of the time. So you can choose yourself, like, okay, the time which you are going to spend along with the market is most important thing. So committing the time and you want to make on it, that's most. So you can choose yourself which time is more comfortable on it. But especially on a US market time, there are a lot of, few uses will be on indicators. So definitely there'll be much volatile. If you don't look into much volatile or much risky trade, so obviously you can trade from the morning, like in the middle of the market, European time or UK time trading is always one of the range type of markets, which will be more easier to understand. And quite you want to take a higher risk with a proper stop loss and other precautions, definitely you can trade on the US markets as well. All right. Thank you everyone for joining today. This is for today. So we'll soon catch up with a new topic, with a new webinar in coming days. Thank you. Thanks a lot.